All right, everybody, it's Tradiest Trades here with another red pill for you. We're going to decode these markets using the commitment of traders strategy. The CFTC has once again laid the codes bare for us to see in plain sight. We just need to know where to look. So, where do we always start looking? Is we look at the commitment of traders commercial index based on a 26-week look back, and we see that right now the commercials relative to their last 26 weeks of positioning, they're barely in there, but they are in there. So that is our bullish code number one. Second code is that the small speculators are in an extreme in short positioning. We see here this is a crowd that, generally speaking, we want to fade in the sugar market. So we see that. Now looking at extremes in positioning, we see that the last time the commercials were this extreme was right back here in September, which preceded this large up move. Now really interesting this week for me to show you guys is the true seasonal. And what's really important this week is to see that there's actually a bullish divergence in the price action compared to what the true seasonal shows. So we see, first of all, that there's a strong tendency for sugar to rally from the end of December into May. So that is good. That's good to see. But what we really like to see is what Larry Williams calls a supercharged seasonal. So we see prices making a higher low when the true seasonal, typically we see sugar makes a lower low than the June lows. So we see the price is actually stronger than the seasonal here. So that adds to my that's another code basically to look for longs here in this market. And to be clear, we're not blindly longing this market, but we are just going to consider this market conditionally set up for longs. Now the next code is valuation. We're undervalued relative to the price of treasuries and the US dollar. So those are the codes, in addition to the fact that the spread is holding up. So we see the spread. This is the spread between the front month and the next month out. We see price has gone lower while the spread has stayed very strong. So that implies very strong demand for the front month contract. And we also see there is also front month premium. So we go over here and we see sugar. The front month is going for more than further months out. So that implies that the commercials really want this stuff and they're willing to pay more to acquire it. Now, so those are the fundamental indicators. Those are the primary indicators that are telling me that sugar is ready to go long. We also see some signs of accumulation coming into the marketplace here on the daily time frame. We see that price is making lower lows while the insider accumulation index was making higher lows. So there is some accumulation coming into this market. And we also see here the percent R on the weekly is in a buy zone. So that's the code. We've decoded the market. Now we wait. It's all about being patient. We need to see a daily trend change confirm on the daily time frame to get us into this marketplace. Until then, we just sit on our hands and wait. And that's it, everybody. We decoded this market. There's lots of other markets that are decoded using the commitment to traders strategy. If you want to talk to me more about commitment to traders trading, hit me up at tradiesttrades@gmail.com. And if you like this video, please make sure you like and subscribe. I appreciate you taking the time to listen, everyone. And until then, have yourself a great rest of your week. Thank you.